Hi everyone, this is Alejandro Cremades, and today we're going to be talking about what to do if your investor outreach is not working. So before we get started, make sure that you hit that subscribe button, and this way you will never miss out on any of the videos that we roll out every week. So let's face it, raising capital is an art. It's not easy. Getting out there, sticking your neck out, dealing with those investors, trying to figure out the strategy, figuring out perhaps things that are working, things that may not be working, and then all of a sudden you're like at a frustration point. Today, we're gonna be really breaking it down for you. We're gonna be walking you step by step to what to do in the event things are not working as planned. So with that being said, let's get into it. So remember that really fundraising, and in more specifically, the outreach, is all a numbers game. If you've listened to perhaps my podcast, the DealMakers Podcast, where I interview some of the most successful entrepreneurs in the venture world today, you'll see that many of them were rejected by hundreds and hundreds of investors until they got a yes. In many instances, it could be perhaps like even as low as a 1% response rate. It could be good, depending on the segment that you're in. Also, what you're going to be seeing, and a lot of people talk about this, people like Adair Risi from Founder Institute and other folks, they even say that typically it takes at least 100 no's to get to one single yes. So again, it's a numbers game, so the more people that you have at the top of the funnel, ultimately the more people that may end up saying yes at the bottom of the funnel. So that's why you want to have as many people as you can target as possible. You need to follow up, and follow up. Period. You are never going to get an investment day one. I have never seen an entrepreneur that goes, pitches an investor, first day they meet, and then right away they get a check. That doesn't happen. Essentially, this is like sales. You're never going to get your sale day one. You need to follow up. You need to really understand the concerns of that investor, or perhaps like we were saying in sales, potential customers. But you want to be able to show them that over the course of time, you're actually delivering on your promise, and they're able to connect those dots until they actually, something clicks for them and say, you know what? This individual actually promised me this, that, and that. And they're actually, those are things that are happening. So that's why every couple of weeks, you want to follow up with something exciting that has happened with your business. Maybe there's like some feedback that they provided you that you implemented, where there was like some nice, positive impact. That could be a great thing that you could follow up with, because you're also feeding their ego. So again, following up is a really big deal. You can also follow up with perhaps new team members that you included in the team, milestones on revenue, so things that are adding value to the business. And always remember that every interaction, every email, for example, needs to finish with a call to action. And what this means is that avoid from finishing with a look forward to hearing from you, look forward to your comments. Finish it with your intention of getting to the next meeting. And that's are you available for a quick catch-up meeting or call next week or the following? ? You want to get to that next meeting, because the more meetings that you have, the more concerns that you're able to resolve. And as I always say, when there's no concerns, guess what happens? Money is in the bank. So that's why you want to be top of mind, and you need to be following up all the time. You need to be asking for feedback. Obviously, as they say, you need to take with a grain of salt the feedback that you get from investors. But if you see that there's a pattern, there's certain things that are being repeated over and over again, maybe on your story, maybe concerns around how you're planning to monetize, how you're planning to build retention, whatever that is, if there is concerns that are repeating, that means you need to grab them and implement them into your story, so that the next time around, your pitch comes in a more powerful way towards that investor that you're pitching. You also should reevaluate the investors that you're going after. Maybe it could be that you are, to put an example, in financial technology, and you're reaching out to people that are more SaaS-based or marketplace-based or healthcare-based that are really outside of your spectrum. Or maybe you are perhaps at the seed stage level, which is the first round of financing, and you're going after investors that maybe are like at a Series B, which is like 2 years before the point that you're now. Maybe you're like at a pre-revenue stage and you're going for investors that essentially are only investing in companies with 5 million plus revenues. So you need to reevaluate that you're going after the right type of investors, and creating that short list of investors is critical. You want to go after investors that are going to be qualified, and so that you can optimize your chances of getting that money. Now, the different factors that you're going to be considering when really putting that list of people together or when reaching out to people are the following ingredients that are critical. Industry, the type of product that you're building or service, check size, the startup stage, your market size, the financing cycle, the location. If you have hit a wall as well with perhaps the profile, maybe it's not institutionals, maybe it's not venture capital firms, maybe it's not private equity firms yet for whatever reason. So maybe you want to shift towards angels, angel groups, family offices, maybe even hedge funds. But this is a trial and error. You need to understand what are the investor profiles that are going to be more inclined to really exploring a potential investment in your business. Also, split testing the actual email language that you're using is a good idea. You want to have some data that guides you to really understand what are the emails and the linguistic that is sticking better with the investor that is on the receiving end and receiving that email from you and that communication from you. So some of the things that you can do when it comes to split testing are the following. So it's going to be the subject line, the email address or the handle that is sending the email, what people are finding when they first hit Google and look you up, your cover letter or direct message, the time of the day and the week that you're sending the message. So try splitting those out. Test, like them, like in different versions, different options, and essentially you're going to be finding some data that is going to allow you to understand what message, what language is really something that people find interesting, and then just go all in with that. You also need to get more introductions. More cold emails, I gotta tell you, is going to land you more meetings, but more meetings doesn't equal to more money. Now, we live in a world, remember, that is different from 10 to 15 years ago. 10 to 15 years ago, it was very difficult to get in front of people. It was very difficult to understand who could be more inclined to investing in your business and really getting in front of them. Now we live in a world where everything is transparent. The world is very much connected. There's just a certain amount of degrees of separation between one another. So essentially the way that you want to go about it is always using the combination of strategy with psychology to get in front of investors. And what I mean with this is that once you have your target list of investors that you want to go after, avoid going directly to them. What you would do instead is go to founders of portfolio companies, meaning entrepreneurs that have received an investment in the last 6 to 12 months from the investor that you're targeting, and ask them for an introduction. Remember that for two reasons, those founders, they're going to be very much inclined with making an introduction. One, the pay it forward mentality is real in the venture world. 12 months before, they were dealing with the same issue that you're dealing with, which is essentially looking for money. And then the second one is that in 18 to 24 months, that founder is going to need more money from their investors, existing investors. So by introducing you, when they know that you're a clear fit with the investment thesis of their investor, you are making them look good. So ultimately, this is what I call the success and the win-win equation, where you get an introduction from an insider, someone that really puts you in that inner circle or gives you that instant background relatedness or social proof with the investor that you're looking to target. And then for that founder of the portfolio company, you make them look good. and you increase their chances of getting a follow-on investment in 18 to 24 months whenever they need it. So again, now we live in a world that is different, it's easier to get in front of people, and now what is a little bit tougher is actually closing them. And for that, you want to follow the process and the methodology that I teach, for example, on places like, for example, Inner Circle, which is my fundraising program, where we help from A to Z with everything related to fundraising. If you've hit a wall and you can't just figure out why you're not able to really get interest, to get that outreach, to really work in the right direction, then what you should do is stop the fundraising, get to work, get to execute, get to build momentum on the business, and if you're able to build something that people want to use, something that people love, that where your customers love you, ultimately investors will find you. So hit a like on this video, also subscribe to the channel so that you don't miss out on all the videos that we're rolling out every week, and leave a comment below and let me know what you're up to. And then if you're raising money, shoot me an email at alejandro@pantheraadvisors.com. I would love to help out. Thank you so much for watching.